Hi traders, welcome to the video. Please pause the video and make sure you understand the disclaimer before proceeding. I've just got the dollar yen open here on a daily time frame. Just a few things I've marked up on the chart. We've got this price gap right here. Okay, if you have a look, candle left, we can see the high of the previous candle and then today's candle low at the moment. This level here is the weekly open. Yesterday, market opened here. And it coincides with this support now over here. And then we've got this range here where this impulsive move here kicked off. I'm keen to get involved with this. This is fairly bullish, but you don't want to be entering long up at this level here. So I'm thinking, given that we're trading up into the London Open, we might see this thing rotate and trade back down, looking possibly fill the gap and give us an opportunity then to get involved. So that's my thinking with this at the moment. What I want to do is show you this. Let's go down to, it's my 5-minute chart here, and I'll leave that marked up. Got this thing going on. Notice this. What I do with these is when they fire in the over here in the alerts log. I come into the chart and I mark up, I look left and mark up the, okay, this is break of structure, right? Bullish. I mark up where the break occurred, like this high. And this is my entry. So what I'll do is I'll layer in buy orders in through here, down. Okay, so I like to set up about 3 initially and then maybe a couple more so that we get a fill if it pulls through, and like it did here, for example. So we got a stop loss under this cloud, and this is a kind of outcome. All right, now I've gone back and looked at the last 10 of these. We've got a 10 out of 10 win rate. Look at this, guys. Look at the pips involved here. What do we got? That's a lot. There it is, 1.62%. Yeah, I mean, quickly go back. I basically take every one of these without any technical analysis. Well, apart from where the breakout occurs, I look left here, it's short, and I'm going to mark up the range here low. That's where I'm going to set up my sell order here, and then you get that. I've got a pretty specific entry criteria. I look to take, look at this one, I look to take 2/3 of my position off really early. And then I leave 1/3 of my position in, I'll let it run and basically just trail it with the stop loss. Okay, so again, we've got this break, and then we look left, we mark that up. There's your entry, and I mean, seriously? What I do is I'll take 2/3 of my position off pretty quickly, stop loss under here, and then basically trail, and you can follow the cloud with this stop loss if you like. And I like to set it up under the cloud initially. Once we gain a bit of traction, then I'll just come up, and as price moves, I'm just going to set the stop loss halfway through this cloud, and it kind of keeps me out of trouble. And then eventually the cloud will turn around and take you out. Here it trades back into it, and if your stop loss is halfway through the cloud here, and I mean also when you see lower highs, lower lows, you see a break of structure, you can exit as well. But going back, we've got a 10 out of 10 win rate. Now, some trades are going to be better than others. This one was okay, it was short-lived, but looking left, okay, so there's my entry, and I'm looking to take 2/3 of my position. I've got a way of measuring that. I use the trend-based fib extension, and I'll place it on the entry, click, and then pull it towards the direction of the trade, go back to my entry and click again, and then grab this handle. Wherever the stop loss is going to go, like, see these highs? Well, these are dots, something like that. You could even pull it up a little bit higher, previous high over here. My TP1 is always going to be that. It's 50% of my stop loss range. And I'll take 2/3 off here, and then I'll let the rest run. Once you take 2/3, you pull your stop loss to break even. So that's risk-free and slightly in the money. So really, there's no issue whatsoever if you get a couple of these. Look at this. The link is below in the in my signature there. Look at this one. Link to Discord. We've got a free group. You can join that. This was a bearish break. Let me show you how this one worked out. And then if we go back further, you're going to see where the bullish break was and how we got. Look at this. See? This is what I'm talking about. 10 out of 10 win rate if you take 2/3 of your position off early and pull your stop loss to break even or better. So I mean, this is the trade you get. Look at that. Now this one here, if you go by the like I've got my set of rules for this. Here's your break. Look left. There's your previous low here. So it wicked back up, got a fill, and if I grab this, I'm looking for my setup. Here it is. I mean, okay, stop loss above the cloud, target 1 reached, even target 2 down here. Right, so anyway, you'll close 2/3 always at whatever. And I mean, this, however many pips, is going to vary. This other indicator's based on the average true range. So I go with that. And I mean, it just keeps me out of trouble. And I mean, look at the results. I've got alerts set up on these currencies, and the opportunities are look, there's a new one in here already. They're firing regularly. So I'm going to be looking for an opportunity. There could be a short opportunity. If this rolls over and we get our signal, there'll be a short, follow it down, and then it'll rotate down here somewhere on the pullback, and then we get an opportunity to buy, and we just follow the signal basically. Okay, with that, safe trading. See you in the next one.